Here's why I believe we're gonna have one of the best opportunities in our lifetime to get into real estate coming in the next 12 to 18 months. Now, it could come sooner. Nobody knows when the bottom is going to happen. But in my personal opinion, I think somewhere right around the 12-month mark is when we're going to see some of the best prices. And here's what's happening. So many people got into the real estate game pretty late, right? They start hearing all the buzz, they start seeing all this excitement, and they start getting FOMO. And that's a recipe for disaster when it comes to investing. And it's not just real estate, by the way. That happens in crypto, that happens in Forex, that happens in precious metals, luxury watches, luxury cars, houses, anything. Whenever you see investments and everybody's getting excited about those investments, you have this euphoria about that specific investment in the market. That's when it starts getting dangerous. That's when people start having a very high likelihood of losing money. There's a saying in the finance world where you want to invest when everybody else is scared. So you have two factors that are really affecting the market. You have fear and you have greed. And whether you like it or you disagree or agree or not, at the end of the day, it's fear and greed that power the market. So if you can find a way to not have any fear when other people are fearful, that means that you're gonna see opportunities when they don't see opportunities. See, fear is one of those things that it actually literally stops us from seeing opportunities. Think of it like this. You walk into a situation, maybe you're walking across a bridge, right? Your goal is just to get across the bridge, but this bridge is one of those really high up bridges. It's a super big drop down on both sides. It's kind of scary, right? Maybe a small narrow bridge, and your only focus is, oh my goodness, this is scary, I don't want to fall. And so your only focus is holding on for dear life. While at the same time, you're not able to enjoy any of the scenery around you. The opportunity there is to enjoy the scenery around you. Maybe it's beautiful mountains or waterfalls or whatever it is. You're so focused on not falling or slipping off of that bridge, even though that probably has never even happened to anybody before. But you're so focused on the fear aspect of it that you don't even get to see the opportunities. So we have fear that causes us to miss opportunities. Then we also have greed. That's the opposite of fear. So when the market is greedy, people start getting FOMO. And this also brings in risk. When there's FOMO in the market, when there's greed in the market, that brings a different type of risk. Remember, so when we have fear, we have the risk of missing opportunities. And when we have greed, we have a risk of missing red flags. So as we start looking into investments, we're like, oh, well, I don't really care. I just want to make money. I just want to move on something. I just want to do this. Everybody else is doing it. People are making so much money. Oh no, I don't want to miss out. So in this situation, we're getting so greedy about the circumstances, about the outlook of the market, about the potential investments that we could be making, that we start ignoring signs that we shouldn't be a part of that investment. And so these two factors tend to really, really drive the market up or down, right? Whenever there's greed, everybody starts buying. When there's fear, everybody's selling. And that's really the difference between a bear and a bull market. If we can understand those two emotions, we need to understand that when fear is at its maximum, that's probably where the bottom is. So when people are so terrified of even putting $1 into the market, they literally have no hope. That's the best time to invest. Because you're at such a low in the market, really the only way that the market can move is up at this point, right? Because if you're all the way down here, there's really not much room to go down further. You really are going to start moving up from that place. That's when you start building those positions that are going to last you an entire lifetime. Some of these positions can be held for literally decades. So if you get into a position and you just hold it, the goal is obviously to never sell. You could just take loans out against your portfolio and the performance of your portfolio. So I think that real estate is going to be one of those markets where in the next 12 months, we're going to start seeing some opportunities where people are so fearful to buy real estate that it gives us a huge advantage as investors. So I'm personally keeping my eye out. I was actually about to pull the trigger on a deal just a couple weeks ago, but I looked at the deal and it's a good deal, but it's not a great deal. And so I think that for me personally, I'm fine just sitting on some cash for now and just waiting it out, because I know that over time, more deals are going to surface. More deals are going to come onto the market. And when we have more deals on the market, well, now I have an advantage as an investor, because I'm going to be able to identify which deals are the best, and I'm going to have my choice, because I didn't FOMO into deals. I wasn't being greedy when everybody else was being greedy. I was being fearful when they were being greedy, right? Relatively speaking, I wasn't fearful of investing, but I was acting in a way that was more in a defensive mode of my portfolio instead of just trying to grab every investment that I possibly can. And a lot of people, they're upside down in their investments now. Being upside down in an investment means that your service cost, your debt servicing fee, whatever you're paying for that investment, is higher than what you're making on that investment. So let's say you bought a house and it costs you $5,000 a month to pay your mortgage. Well, rents have recently dropped down. And so if your rents are only $4,500 a month, well, now you're upside down in your investment. You're literally paying your tenants $500 a month to live in your house. Now, is that sustainable? Well, for most people, yes. If you're buying a rental property that costs you $5,000 a month, you probably have an extra $500 to float that mortgage, right? Because again, it's going to be temporary. You might have to do that for 6 months or 12 months or maybe even a couple of years, but eventually that investment is going to become profitable for you. So you have the option of just waiting it out, right? Or for some people, let's say you had 20 of those properties that happened. So you bought 20 properties like that in the last year and you just used all your cash because you were so excited about the real estate market. Well, guess what? 20 times $500, that's $10,000. So now you're in a $10,000 deficit every single month. Can you float that? How long can you float that for? If you don't have a strong cash flow coming in, if real estate is your only investment, maybe it's not such a good idea to continue being in that market. It may not even be that you desperately need the cash, but just letting go of losing investments, that might be your motivation to sell. And I'm not saying that it's you specifically. It could be literally anybody in the world. There are people who don't do the math on their investments and they just kind of go into them blindly, and they may be investing for their first time ever. So maybe they don't even know what math to do. They just found out, they saw somewhere on the internet that it was a good idea to buy an investment property. So they bought an investment property, they didn't do the numbers, and now all of a sudden they're in a bad situation, and now that investment is actually costing them. What do we do in a scenario like that? Well, we find motivated sellers. Obviously, that's going to be a motivated seller. If he's losing money, he or she is losing money on their investment, we want to be in a position where we have dry powder, where we have cash, and we can actually hop into those investments and take them over. So for a lot of those people, we can actually take over the payments on their mortgage, and we'll make those payments so that they technically don't lose the house, but we're able to use that house for whatever we want to use for. And so as savvy investors, we know that long-term rentals are not the only option. Literally, if you're renting out long-term, one of the easiest ways to boost your income is just to move it to a short-term rental. You could literally just Airbnb that house. Like in that example, if your monthly mortgage payment is $5,000 and you're making $4,500 long-term, well, I bet you if you flip it to an Airbnb and you start renting it out for $250 or $300 a night, 30 nights at $300 a night, that's $9,000 a month. Well, all of a sudden you're making double. You're making double what you were making long-term renting, but now you're just having to do a little bit more legwork to make it more profitable. And at the end of the day, you don't even have to operate your own Airbnbs. You can hire somebody to do that for you. And my company actually offers that service for people. We have an entire division of the company that manages Airbnbs for people and maximizes profitability. And a lot of times, if people don't even want to find these Airbnbs for themselves, we can find those Airbnbs for them. We'll go out, we'll do the market research in whatever market they want. We'll find them the Airbnb. We'll get the owner to agree to let us use their house for Airbnb, right? We don't always have to buy it. We can just arbitrage it. And then we use that in the marketplace on Airbnb and make significantly more. We usually target 3 times as much as we're paying on a mortgage, in this case on a lease. So if we're paying $5,000 a month, we're going to target properties where we believe we could easily make $15,000 a month on Airbnb. And that way, even if we're slightly wrong on something or we miscalculated, we're still very, very profitable. All right, guys, make sure you like, comment, and subscribe, and I'll see you all in the next video.